crude oil futures, risk versus reward. Katie's had bad experiences with crude. I've had bad experiences with crude. It's a wild, wild market. But with those bad experiences, there are great ones because, of course, with every risk, there is in futures, especially an equal, or sometimes we're hoping greater reward if you do have, good or bad experiences with the CL futures or with USO, which is like a fine but kind of broken ETF, or hopefully the new SMO, the new small crude oil futures. Definitely reach out to me or Katie on Twitter, Frank_Caberna. You can find Katie as well, because we love to talk about, those crude oil horror stories. Hopefully we won't get into one today, Katie, but we have to jump into something with crude, given these extremes. We're back at the highs here at $120 a barrel. And can you guess, I know Katie's so busy that she didn't get to take a peek at the slides today, so I can hit you with the question here. What is the all-time high in crude oil, Katie?
What is the all-time high in crude oil that you just said like not too long ago, or in general?
All-time high that maybe I did say it just a little bit ago. I'll tell you.
In crude, 120 in small SMO.
No. Crude oil, the crude oil market, going back to the 90s. I'm talking 3 decades worth of trade data.
Oh God, didn't you say it was like 126 something? I missed it.
And this is why you and I are not going to work out, Katie, okay? Because you don't listen to me, all right? We've talked about this in the past. The all-time high in crude oil is 143. So still a decent amount of room to get to those highs. And this is something that, of course, if I'm selling 120s, Katie, I don't want it to go to 143. But It is nice to know that we are in this rarefied air, and I can kind of lean against that extreme, right? Of like, even in the most crazy crude oil times, 143 is where it got to. And it's not like, oh, well, back in, 97, crude was trading 320. Like, that would be pretty freaky.
Right.
But this is more manageable, right?
Yeah, I agree with that. 143. Now I'm listening. You can quiz me again next Wednesday, and we'll see if I remember.
Okay, here's a question I know you don't know the answer to, but this is like a classic. This is what they would ask me when I was interviewing at like prop trading firms here in Chicago, is like to see how your brain works here. And Katie's brain is tops, by the way, but we are going to test it. Katie, how many trading days have there been since January 1, 1990 until today?
January 1, 1990 till today?
Trading days.
So it's like 252 times something with math.
That's see, you started real strong there, and then you just said something with math. I don't know if that's problem solving.
That's okay. I literally don't know. I'm going to show how bad my multiplication skills are. So why don't you just tell us?
The answer is there's been over 8,000 trading days, 8,141 to be exact, here in the crude oil market, going back to 1990. And just 66 of those days, the crude oil market has closed above 120. Now, is that a guarantee that it's going to go lower? No. Is there a scenario whereby we're telling our kids and grandkids that 120 in crude oil, that was cheap back in our day, and it's trading, in the 150s, the 200s? That's the new normal. Of course, there's a scenario for that. But we're trying to make a trade here, Katie, trying to make some money in the next couple of hours to couple of days. And this market's only been here 0.8% of the time. I've got to use that 66 days out of 8,000 days we've been up here. I have to be going against that, right? As a contrarian.
Yeah, I'm with you. Less than 1% of the time over 8,000 days. I mean, like you said, it's a compelling case.
And to round off that case, I wanted to, I think this is kind of interesting, give people the tiers. Like, what can you expect if you were, dropped down from Mars today and you saw crude at 120? You'd probably be like, oh, it probably trades around $100 on the average day. No, the average in this market is going back to the 90s is about $50 per barrel. It spent the majority of its time from 1990 until now between 0 and 50. That being said, the last couple of years, it spent most of the time between 30 and 70. But still, you can see only 6% of the time above $100. And so this is a trade where maybe I'm selling crude, Katie, and I'm selling the 120s and I'm risking the market getting to that high of 140. But I really don't think it's off to try to expect buying this market back on the profit side of it below $100. This is a classic asymmetric, in my mind, reward relative to risk. Any closing remarks on that type of stuff here, or did I convince? Not that I'm trying to convince anyone, but I'm just trying to lay out the facts.
You laid out the facts very eloquently. In another life, you could have been a lawyer.
I love it. Thank you very much, Katie, for that. Thank you for joining us. Exhibit A, crude oil has traded 66 days above 120, and thus you must acquit. No, I don't actually know anything about
objection.
Thank you for objecting, because we will close out the segment here. Katie's got stuff to do. I have to stop talking so Tasty Trade can move on with the next show. Splash into Futures is coming up next. You're going to want to stick around for that. Make sure you're checking out Katie on Twitter and everywhere else. Everybody have a great day. Peace.
Peace.